Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's CEO and market expert interviews, we have Mr. Mark Chalmers. Mark is the CEO of Energy Fuels. Energy Fuels is a US-based producer of uranium, also a major player for vanadium and medical isotopes, and also emerging player in rare earth business. Mark, welcome and thank you for coming to my show.
Well, thank you. It's my pleasure, Lucian, to be on your show.
Yeah, thanks. Before we kick off with the questions about the company, give us a short introduction of who is Mark Chalmers? How did you enter uranium business, and how did you become Energy Fuel CEO? I know that you are a 40-year veteran, so it can be short, but let's give a 2-minute overview of your background.
Okay. No, with pleasure. I started in the uranium business in 1976. And I got into the business as an underground uranium miner. I then enjoyed that so much that I got a degree as a mining engineer. And I have mined both conventional and in situ recovery projects around the world, in the United States, in Australia, in Namibia, Malawi, Kazakhstan, and I've reviewed projects around the globe for decades. So but I started off as a miner, and that's always served me well. And it gives me the ability to understand from literally the ground up.
Excellent. Mark, my first topic is uranium market. We see almost every day positive news flow for uranium. We hear that long-term prices going higher, contracting speeding up, spot also with steady rise as well, but uranium stocks are flat or go one step up, 2 steps down. Why is that? Is that a seasonality factor or something else? What's your take on this?
Look, I think people want to see the price uranium go up. The price uranium really drives the equity interest, and I think it's sat there in that mid to high 50s for a long time. So I think people get a little bit bored with that. So I think that when the price uranium starts to move, the equities will move, and people are really looking for a 6 handle and really ultimately a 7 or 8 handle, because the new incentive price for uranium production is well in the 70s, if not the 80s, and that's where investors are bored. They're seeing the price in this upper 50s, and really any new project, particularly new projects that require material amount of capital, they need more of that.
We mentioned long-term contracting. Can you give us an overview? How many utility customers under long-term contracts do you have, and what are the terms of those deals in terms of quantity and pricing?
Yeah, well, we have 3 long-term contracts with 2 nuclear utilities here in the United States. The terms are confidential. They have floors, they have ceilings, and they have a formula that will adjust with increasing uranium prices, but with floors. They're substantial enough. I mean, they're between around 2.5 to 4.5 million pounds, depending if they flex up quantities or flex down in that order. But it's enough to get a mine or 2 going with Energy Fuels. So right now, we signed these 3 contracts back in a little over a year ago, and we hadn't signed any long-term contracts for a number of years, and we're really looking for that next step up in pricing to sign more contracts. So the utilities still seem to be, they seem to be pretty comfortable with certainly in the high 50s and 60s or low 60s, but they haven't quite got there when it comes to 70s. So we believe that we need that next step change to sign additional long-term contracts.
You just answered my next question, and that is, do you have any negotiations going on for signing new contracts, or are you waiting for higher prices? Do you have a target for the number of long-term agreements to be signed by 2024, 2025?
Well, we're always talking to the utilities and trying to see what they might be willing to pay. So those dialogue kind of continue on a continuous basis. we have around maybe 25% of what we would want to contract contracted through 2030 right now. We could increase that 2 or 3-fold quite quickly with the right pricing. Our company can produce with limited capital between about £1.5 million and £2 million per year, and limited, I mean just really working capital to get those projects going. We can do more than that in time, but it'll require substantial additional capital investment, in the hundreds of millions of dollars. But most people can't do anything without hundreds of millions of dollars to start with, and we can do quite a lot at that 1.5 and 2 million pounds with existing infrastructure. So yeah, we could sign contracts for 2-3x what we currently have, and we will as soon as prices warrant that.
Okay. Let's touch a bit on demand. Do you see at present more demand for uranium or for rare earths?
I think the demand curve for rare earths is projected to be much higher growth on a year-by-year basis than uranium and nuclear. I mean, nuclear grows at sort of a slow pace, a few percent per year. But one of the things I see happening in the uranium business, the nuclear business, is that a lot of the deposits that are out there will deplete themselves over the next 10 years. And so you have steady but slow growth up, but you have some of the best projects depleting themselves. So they're two different sectors. And, on the rare earth front, they're talking, 3-4-fold increases over the next 10 years. And we're not looking at that in the uranium business thus far. So they're different.
But same question, but different time frame. In 5 years, more demand for uranium or rare earths?
I mean, as for a company like ours?
Yes.
I think that the rare earth, look, this is the way I look at the uranium business in the United States with our assets. We can be U.S. significant as a uranium producer, and we have been for really decades. Our assets have been, and will continue to be U.S. significant. But with our assets, we're not going to be world significant. We'll be a small producer in the eyes of the world, and but we'll be significant in the United States, particularly for the fact that we produce in the United States of America. On the rare earth front, I think we can be world significant in the rare earth business. So I think that the rare earths can actually be a bigger part of our business in time. But I've got this long history of uranium. So if anybody thinks I'm leaving the uranium business, I'm not. I mean, I love the uranium industry, and we're in a unique position in the United States in the uranium industry. We're going to continue to advance that and be creative on how we can expand that in the United States. But we'll never be world significant uranium producers. No uranium producer in the United States, in my opinion, is going to be world significant uranium producers just by the nature of the deposits, but significant in the United States.
Got it. But just to clarify, looking to the future, your largest source of income will come from uranium or rare earths?
I think ultimately it has the greatest potential to come from rare earths.
Okay, got it. What is the 2-year strategy plan for the company uranium production? How many uranium do you plan to produce, from which assets, when, and at what costs?
Yeah, well, currently we're planning to produce into the existing contracts that we have. So somewhere in the order of 500,000-600,000 pounds a year using inventories and some of our alternate feed. We'll ramp that up as soon as we get higher price contracts. We'll produce initially from our conventional assets, initially out of Pinyon Plain and perhaps out of the area near LaSalle. So, but we'll ramp it up as quickly as the market dictates it. So, as I said, if we're producing 500,000-600,000 pounds, and we have other sources like alternate feed that can contribute to that. We will ramp it up to 1.5 million to 2 million pounds with the market, and greater than that if the market continues to support that. So, that's how it looks. So the next couple of years, we could be producing, we'll be producing out of Pinyon Plain Mine and out of LaSalle, and we'll see how it develops case by case from there.
Okay, but assuming uranium prices are extremely favorable in the next couple of years, what would be expected maximum yearly production rate of uranium for energy fuels?
A couple years out, a couple million pounds per year without substantial additional investment. So we can produce a couple million pounds per year under favorable conditions with limited capital investment. That can become 3-4 million pounds with additional investment over time.
Okay. You mentioned you have both conventional producing assets and ISR assets. Let's cover some of them. White Mesa Mill. What is the status of the mill right now? At what condition it is? What are you doing currently over there?
We're installing what we call our phase 1 separation plant for recovery of rare earths. And we produced uranium through late last year from alternate feed material. So this year, White Mesa is mainly focused on rare earth processing, looking to next year. We are developing the Pinyon Plain Mine in Arizona. We've got 25 people there right now working, getting that ready. That's a low-cost operation relative to the rest of really in the United States. We think it's one of the lowest cost going forward projects out there, and we feel it's about a $35 to $40 a pound producer, and so we're ramping that up first. We're also doing development work at a couple of our conventional assets. The Nichols Ranch project is currently on standby. We're doing some groundwater restoration there, but it could restart at any time. So again, we will build our book based on coming up with a contract portfolio that supports that buildup.
Okay, got it. When do you think that you will be able to fund the second circuit of at White Mesa for rare earth processing, and how will you finance that? By equity, bank financing, or combination?
Well, the phase 1 we're going to finance out of Treasury. It's about $25 million. We should be in a position to start commercially separating rare earth oxides, NdPr, and samarium plus early next year. But we've always got that fully funded, and that will be up to about given enough feed, up to about 1,000 tons of NdPr per year. So that is 500,000 to 1 million electric vehicles of NdPr for the electric permanent motors. So we see that as very significant. Meanwhile, we'll be advancing these uranium projects that I mentioned, going back into production, mining ore and stockpiling it at the mines or at the mill for a processing run likely in 2025.
One hypothetical question. How much is White Mesa Mill, that kind of facility, worth today? What would be the replacement cost for that kind of mill?
That's a big question, but I would imagine in the order of $500 million to build a White Mesa Mill today. And of course, it's fully built, fully permitted, fully paid for. So it's a very unique facility with the uranium and vanadium circuit, and soon to have the rare earth circuit. And it's on a very large land position of about 5,500 acres. So we think it's a very, very unique asset at this point in time in the United States of America.
Have you ever been approached to sell that asset alone? Not the company, not the projects, but just that asset. I know it's a strategic asset and you will probably not sell it, but have you ever been approached?
Not seriously. There have been people that expressed interest in it in a joint venture or partial ownership, but not seriously.
Okay. We touched on some of your projects, but I would like to hear your thoughts about Ship Mountain, Roca, Honda, and Bullfrog. What is the status there, and how far along is the permitting process for these projects?
Well, yeah, we have some very substantial assets that are in various stages of permitting. We are looking at Sheep Mountain as a heap leach facility, and we're doing a lot of work there right now to determine the amenability of it being a heap leach facility. It's fully permitted for mining, but it's permitted to process at the Sweetwater Mill, which is next door. And we would have to get permits for a heap leach operation at Sheep Mountain. So I would say it's partially permitted, certainly able to mine it, and we're advancing it as potentially a heap leach. Roca Honda, we've done a substantial amount of permitting on that over a number of years. We paused that during the period of low prices the last few years, and we're restarting those efforts at Roca Honda right now. And then when you look at things like Bullfrog, we haven't done much with that lately, but it's also a very substantial underground mine.
Are the company's plans at all affected by Biden's decision for Grand Canyon territory, and how that impacts uranium availability?
They're not impacted. The company has 2 mining projects fully permitted, and in the fine print, it says that those projects are fully permitted and able to go forward. We also have a number of claims, and they also mentioned the claims that were in place before the withdrawal that was done in the Biden administration, not Biden, but the Obama administration, 2012, were still valid. And we have a number of claims on a number of deposits that are valid. So we think that we're on a very strong position there, and it's been basically validated by this monument process. And so we're full tilt there. So we don't see any impact with anything we have currently. It does impact with new claims in the future. So that's unfortunate, but we have some of the best deposits that were discovered over a period of a number of decades, and those are valid existing rights right now.
Okay, that's great to hear. Well, what kind of rare earths are you producing at the moment, and are you expect to keep your eyes on some other specific rare earths?
Our focus is on monazite, which is generally a byproduct of heavy mineral sands mining. It was considered a waste 3-4 years ago. It's not now because it's very high in rare earths and uranium. So we're very excited about that. We're still securing small commercial quantities out of Chemours in Florida and Georgia, and we plan to continue receiving that. We acquired a heavy mineral sand deposit in Brazil called Bahia, very large land position there. We are looking at other sources of monazite globally, and we're engaged with a number of companies globally on that front. And it's really about building up a material scale supply of monazite for feed into the White Mesa Mill. Now, in due course, could we look at other feed sources?
Yeah.
Yes, we could. But initially, we're focused on monazite. And the reason we're focused on monazite, because it's some of the highest grade rare earth products that contain uranium and some other radioisotopes that we can process at the mill. If you look around the world with some of the issues that even currently Linus is having in Malaysia, we don't have that problem with White Mesa Mill. We think we fix a real problem with processing of this radioactive rare earth feeds, and it's White Mesa Mill because it's a existing facility that can recover the uranium.
Are the gross margins better for uranium or for rare earths?
I believe that and it goes back to what I said earlier, that we will be U.S. significant as a uranium producer, but we could be world significant as a rare earth producer in time. So, and I think that in itself reflects being lower cost in a global perspective. So it's not that there's anything wrong with the deposits in the United States. There's some really, really good deposits, but really, when you get down to it, you know, they can't compete against the Kazakh deposits or the best of the Kazakh deposits. They can compete against some of the Kazakh deposits, but not the best of the Kazakh deposits. And I think again that, you know, I've got to drive a company that's going to get the best return for the shareholders. As I said, I'm absolutely committed to the uranium industry. I produce uranium all over the world. I really love our U.S. assets and some of the best out there in the United States. And it will be U.S. significant, and it will be competitive in a new market, because a lot of the projects out there, new projects in the uranium business, haven't been proven commercially, and a lot of them will fail. So they're in a really neat spot. Now, when you look at the rare earths, because of all the things that I mentioned, with the ability to recover the uranium, existing infrastructure, having the permits in the United States of America, where we have access to water, power, infrastructure, people, transport, with a fully permitted constructed site, that's a unique advantage. Most companies that are getting into the rare earth business are going to spend $1 billion plus. And so we're not going to have to spend $1 billion. So, you know, it's a unique story, and I'm proud of what we've done and what we're doing with the White Mesa Mill to maximize its contribution to our company.
Okay. What about your vanadium and medical isotopes? You also have that part in your company. What percentage of your future income will come from that commodities, so to say?
Well,
and
vanadium,
do you see the market growing in the years to come?
Well, vanadium's an interesting spot, and you know, it's like third or fourth down the list on our business plan, but we have a long history of producing vanadium, and we have the only conventional vanadium processing facility in the United States, which is unique in itself. Historically, vanadium is very spiky. It can go very high price, very low price. It's hard to catch that cycle, and so when we produce vanadium, we hold it in inventory and we sell it when the market changes, because the market could change very quick up and very quick down. So we've been selling vanadium a little bit at a time, and we've sold some, you know, around $12, $13 a pound. Current price is around $8 or $9 a pound when it had a bit of a spike. So we see it as it's a critical element. And we have the only conventional processing facility with a long history. Plus, we have mines that are uranium vanadium mines. So it's a unique play for us. Do I think the fundamentals are changing for vanadium? I believe so, but we just have to see how they roll out in time. The medical isotopes, nobody else in the uranium space is talking about medical isotopes but us, that I know of. And again, unique, because we're mainly focused on radium-226 and 228, the same elements that Madame Curie was focused on many years ago. And when we're processing uranium and rare earths, we solubilize some of these elements. We're not, you know, banking on it. It's early days. It's kind of aspirational targets, but there are emerging needs for these new elements that nobody cared about today, that didn't exist 10 years ago or 20 years ago. And if we have some of these elements, why not consider recovering them? Who else is in a better position to recover these than somebody like Energy Fuels with the White Mesa Mill?
Yeah, good point, Mark. Good point. Let's touch a bit on M&A. Is your plan to pursue more M&A in the future, and what potential profile of the assets or companies would fit in your long-term strategy for the company?
I'll start with uranium.
Yeah.
We're not done with the uranium business, and we did divest the Alta Mesa project, and that was, we believe, a great transaction for Encore and Paul Goranson, who's a very good friend of mine. They needed an asset in Southern Texas, and we were able to work out an arrangement there that I think worked for both parties.
Yeah.
That really cashed us up. It cashed us up substantially. We're reinvesting in the company, but we still are looking at other possible acquisitions, mainly in the United States, on a case-by-case basis. But we'll be very selective. We want things that complement our existing activity areas, and make, you know, economic sense to us. So we are still interested in acquiring assets in the United States in the uranium business.
Mm-hmm.
On the rare earth front, we are looking at supply agreements and potential acquisitions in the United States and globally to secure adequate supplies of monazite to meet our growing demand, to fill up what we call phase one, and be in a position to create more capacity at the mill, what we call phase two, which is around 3,000 to 4,000 tons of NdPr, which is, you know, half to 2/3 the size of Linus.
Mm-hmm.
But we need the feed to do that, and we're basically on a strategy to look at how we can feed and secure more monazite going forward. We think, again, it's a unique position for our company.
Okay. I have some questions for my followers, so if you could answer them, it will be great. The first question is, one follower wants to hear your response on M&A risk. Since the company represents so much potential value in the future, it may be a target for takeover by someone large like Cameco. How would you respond to a hostile takeover attempt?
Well, our goal is we want to grow our company, you know, to be a multi-billion-dollar, you know, company, you know, with this focus on critical elements. We're not looking or wanting to be taken over because we think there's a lot of runway left for our company. You know, you take something like a Cameco, I think, you know, what we do is different than Cameco. And, you know, I don't think that we'd be an M&A target for Cameco. But you look at, you have a public company, and if you have successes, you know, that's always a possibility. But we're certainly not planning on that to be the outcome. So, you know, our plan is to keep driving our bus the way we plan to drive it, to be value creative with the assets we have, and be creative in how we orchestrate what we have, which is substantial, and you know, and grow the company. But could we be taken over? Yeah, that's a potential, you know, threat, and it is for any public company, really.
Yeah, good point. Second question, at what order, you already answered the part of that question, but I will ask nevertheless, at what order will you bring mines online? Pinyon Plain first, then what is after that?
Yeah, it's probably Pinyon Plain first, with no question. Then followed by La Salle and Nichols Ranch. That's our main, you know, kind of order of startups at this point in time. You know, a lot depends on what contracts we sign, what the quantities are, when the quantities for selling the under contract, what years they come into play. And a lot of times you sign a long-term contract and it you don't start producing into it for 2-3 years. So those are all factors. It's very important to have some runway on these contracts, because when you start up these mines, you don't want to start them up for a year, 2 or 3, and shut them down. You want to run them at as close to capacity as you can for as long as you can.
Yeah. In one of the recent interviews, you said that about additional monazite feed. In the last 12 months, you have been approached by several vendors and are in advanced negotiations. How long does it take? How long will it take? Weeks, months, or longer?
Yeah, that's been kind of our Achilles heel. You know, everybody's got to have a little Achilles heel. The problem is that monazite, when we got into business, was worth nothing. And then there was a published China price that went up to $10,000, $11,000, $12,000 a ton, which we weren't expecting to have prices anywhere near that. Now, we feel we have a very clear strategy on how we're going to build this book. And a number of players that we talked to a year or two ago, a lot of them were always benchmarking to the China pricing, which in many cases we believe was manipulated. So what's happening now is that most are finding that either if they're currently producing monazite or they plan to produce monazite, and they want to get any funding from the Australian government, the European Union, the US, or the Canadian governments, they have to kind of discount the China connection, that they have to come to somebody like us to supply the future processing. So we see, and the other thing is there were these aspirations by many that they were going to build all the infrastructure they needed to get into the rare earth business on their own. And when they did the retumble of the cost of doing that, they all seem to be coming back to talking to us more seriously right now. So as I said, we're going to look at a combination of procuring from certain companies, having our own sources like Bahia, and potentially some M&A, other sources of monazite. So we have a hybrid approach. We have some mines that we own, and we have the ability to buy, trade, swap to fill up our mill capacity. Okay. So there's nobody that has a playbook of what we're doing. Nobody has a playbook for retrofitting a uranium processing facility into a rare earth facility and a uranium vanadium facility. So we are charting our path with nobody else having done this before.
Okay. By your best estimate, by 2028, what percentage of uranium will be used in U.S. nuclear reactor fleet that is mined in the U.S.? That's the main question.
If you look at you said you were in the boom of that 6, 7, 8, 9 period. You know, something that's interesting is the uranium produced by U.S. producers, including the Cameco assets, was about 4 to 5 million pounds per year. That's what was produced in that time period. And the assets of Energy Fuels produced about a third of that. So between Cameco and Energy Fuels, we produce 85% of the uranium produced from that going back 15 years. So where are we going to go? Now, there are projects like UR Energy and stuff like that that weren't up and running 15 years ago, and they came in a little bit later. You know, I think the U.S. can get to maybe 10 million pounds per year. And I know there's some people that say 20, 30 million pounds. It really depends on the price and the market. The U.S. produced 40 million pounds when the market was hot in the 70s and early 80s. You know, it depends on a lot of factors. But I think in a reasonable scenario in the United States of America, the U.S. could produce up to 10 million pounds of uranium. And that would be at the current reactor burn, whether that's 20% of the reactor burn. Now, what happens with small modular reactors, I don't know. And it could be higher, it could be lower. But I think with the projects that are permitted and getting closer to ready, that's probably not unrealistic. But historically, from that 6, 7, 8, 9, 10, 11, 12, it was about 4 to 5 million pounds per year.